Thank you very much. Again, my name is Joon Pak. I'm very honored today to be joined by my three distinguished panelists to talk today about innovation and regulation in the blockchain industry. Before we jump into things, I think it might be helpful for everyone in the audience if maybe the panelists could maybe briefly introduce yourselves and the firms that you guys are representing. Starting with you, Nick.
Thanks. So I'm Nick Chong. I'm head of North America for Quoine. Quoine is one of the largest crypto exchanges in the world. We're in the top 20 regularly in terms of trading volume on our platform. And at Quoine, I take care of the expansion of Quoine and business-to-business services for our North American customers.
Tom Trowbridge, president of Hedera Hashgraph. We are a base layer consensus algorithm. And so it's a mouthful, but what that means is we're the protocol layer, the very bottom of the distributed ledger stack. So when you think about blockchain and you think about what you might be used for, these applications are built on top of a base layer. They're built on top of something. And the most commonly known one of these is Ethereum. So you can think of us as a competitor to Ethereum. But to make it even more confusing, we're not blockchain. We are a directed acyclic graph, which is a different type of architecture. And if you think about blockchain, a traditional proof of work blockchain, what people, kind of an open secret that isn't discussed much, is it's designed to be slow. And it has these terrific security properties, and that is what I think has attracted a lot of attention to it. But it's fundamentally slow, and it doesn't work if it's not slow. And so people have tried to do side chains and child chains and kind of work around it to make it fast. And you always end up with security trade-offs if you do that. But Dr. Baird and Mance Harmon, the two founders, started from the ground up and chose an entirely different architecture to make something that is very fast and very secure. And to give you just one other element, Dr. Baird, who created it, has a Ph.D. in computer science, which he got in 2 years and 9 months at CMU. He met his co-founder, Mance Harmon, when they were both working for the senior scientist for machine intelligence in the Air Force. And so there's an AI link here, which was back in 1993. I don't think many here knew of AI in 93. And they've been working together ever since.
Wow, that's hard to top. Well, I represent OhmniLabs in Cambria. And OhmniLabs has been around since 2015. We build robots. But before we build robots, we build 3D printers, and we print robots. And what we are trying to do with Kambria is creating an open source hardware and facilitating innovation in the hardware space by giving a code base, a language, a KDNA, where everything works together from software to hardware to electrical to mechanical. And we're creating a protocol that allowing for inventors and developers to do what they do best, and having the manufacturer and prototyping do what they do best, and having the companies do what they do best, which is they understand the market. They can drive the innovation. Or at the very bottom, the inventors can drive the innovations. And we are approaching this problem from the top down and the bottom up through our open innovation protocols.
Thanks, Shaw. So just to kind of begin this panel, I think with the topic being regulation, I think it's pretty evident that there is no global standard for how this industry is currently being regulated. You have countries like Malta, they call themselves Blockchain Island, where they're very friendly to cryptos, and other countries that behave in a very different way. Quoine, very interestingly enough, was the first global exchange to be regulated by the Japanese government. Nick, could you tell us a little bit about your experiences and how that came to be?
Sure. So we actually have been operating our crypto exchange since 2014. Quoine was one of the earliest Bitcoin and cryptocurrency exchanges to operate out of Japan. Today we have a global reach, but speaking about our base of operations, Japan, essentially after we started operating, there was a hack of one of the larger exchanges in Japan called Mt. Gox, where $500 million worth of Bitcoin were actually stolen. And following that, something I think very interesting and unique to Japan happened, besides the fact that there was a lot of worry surrounding that hack, but the regulator in Japan took, I think, a stance that no one really could expect. Instead of basically saying, and keep in mind these were the early days of Bitcoin when it wasn't as well known as it is today, and I still think that needs to do a lot of progression, but keep in mind that back then, it was a relatively small market. And what the regulator could have done is say, you know, let's disallow Bitcoin, let's ban it, let's put it away. But instead, what they did is they said, let's regulate Bitcoin, and at the same time, we're going to recognize Bitcoin as an official method of payment. So what that allowed is essentially today, many of you may know that in Japan, a lot of people have heard about Bitcoin. And I was just in Japan a few months ago. I saw a lot of advertisements from Bitcoin companies in the metro, in the subway, and a little everywhere. So I think that right now, the awareness of Bitcoin in Japan is very high. But at the same time, with that awareness and all the good stuff that came with it, came a new regulatory environment. And what that means for the industry, and especially for crypto exchanges like us, is that we need to be licensed to be able to operate in Japan. And in a way, we're regulated almost like a financial institution, like a bank. It goes far beyond what we see in other countries, where essentially regulators have been more concerned with the usage of cryptocurrency for money laundering purposes. Whereas in Japan, we still have that as well. But in addition to that, we have a lot of measures that we need to take as basically an entrusted entity where we keep your crypto funds and your fiat currencies. So how do we keep these funds secure? And that's what the regulators have really put their attention to. So in the manner that we store the funds, in the manner that we self-regulate ourselves, in the manner that our employees are entrusted with the different passwords and security layers, this is where essentially a lot of the action has been in the last couple of years since when the regulator recognized Bitcoin and put in the new regulations, which was in April last year.
I think it's pretty evident that Japan is certainly one of the leaders in this space and having that regulatory perspective. Tom, could you share your views in terms of the differences in the U.S. and what you're, I guess, essentially dealing with?
Yeah, I think I'll go about it this way. I think we sort of touched on this, but there's two dimensions of the regulation. There's the regulation on the specific tokens, currencies, you know, whatever you want to designate them, and then you have exchanges in those regulations. And so they're not the same. And so on the token side, which is where we are at Hedera Hashgraph, we will have a token. There has been a lot of focus on what is a utility token versus a security token, and we can talk more about that. But that is governed generally initially by the SEC, Securities and Exchange Commission, and there are different sort of regulatory windows in which you can raise money, and there's Reg D, there's Reg A, and sort of we can talk about those if you want to do in more detail. But then there's also the FinCEN and money transmitter licenses, which apply generally to exchanges. Those, while the SEC is federal, FinCEN is federal, but if you're an exchange or you even have a component which seems to involve transferring money around, you have to be regulated in any state in the U.S. in which you operate or you have customers. And so that is, except for Montana. So there are 49 different bodies. And that's why if you look at you try to go on and log in, create an account in an exchange, if you're in California, you might be able to. A lot of exchanges don't let you if you're in New York because the New York regulator is more difficult. And each regulator has its own standards. And that obviously creates barriers to buying and selling and to entering this market. There are exchanges which are regulated in New York. They exist. The New York regulator just put out a report where it had reviewed kind of the compliance and status of the variety of exchanges, both under its jurisdiction and some that were not under its jurisdiction. And there's or at least that's what some thought. So those are, I guess, I'll differentiate those two. And I guess going back to where the action is in the U.S. is with the SEC right now, with the view, will they designate additional tokens as utilities or not? Will everything be a security? And if things are designated as security, what are the implications of that? And that is, I think, an area of huge interest in the entire crypto community. And one point on Japan, while we're on it, is the exchange component is well regulated. But my understanding, and correct me if I'm wrong, is that the FSA also is regulating, needs to approve any token to trade. And there is a huge backlog. And while Japan was very forward in recognizing Bitcoin, I don't think they've actually allowed many other currencies. And there's a huge backlog. And so if we, for example, want our token to trade in Japan, that seems like a very difficult and opaque process at this point because nothing new has been approved by the FSA in some time, and there's no real insight into what that process will be or how long it will take.
Maybe I could give a little more insight on your comments, Tom. Essentially, the Japanese regulator, the Financial Service Agency, are working on a framework where additional tokens could apply to get whitelisted. And at the moment, there's maybe about a dozen cryptocurrencies only that are on that whitelist. There's only about a dozen cryptocurrencies that can be traded in Japan legally. So we're waiting for the details of that framework, actually. But one thing that I think has already emerged is that for a token to be whitelisted, it will require an existing cryptocurrency exchange to sponsor it. And today, there's only 16 licensed cryptocurrency exchanges in Japan. Quoine is one of them, although there's a backlog of about 160 different companies that are looking to get licensed this year.
Yeah, I want to provide the perspective of a company that is also on the token side of your column. And in the list of you have a regulation D and A, there's also a regulation S. And the regulation S is basically an exemption from regulation, which is a regulation in itself. Okay, it's a little bit of a catch-22. So you're regulating, but you're saying that you exempt from regulation, but you can only sell to non-US person and also non-Chinese person that are accredited investors. And so there's a lot of these that are basically treated as a security, whether or not you deem yourself as a utility token. So Kambria is a platform that has already been launched. We launch it. There's functionalities. You can do you can go on there and you can look at the code base and you can start looking and building. And we have companies that are building robots as we speak. But it doesn't matter. It doesn't matter because I think that from the SEC, while we are all kind of like holding our breath and thinking that, okay, the SEC will provide us a little bit more insight, I'm not quite sure because I think that their SEC, the regulatory agency is probably thinking that we have provided enough clarity already. You know, we have a framework around security and derivatives, and the traditional securities are already there. We can just implement this framework. So I would love to have more clarity. That would help all of us. But at this point, I think that we, as a company, for our company, we will continue to be very cautious and working within the current framework that has already been there. So qualifying and making sure that we follow regulation, as in our case.
Yeah, and I guess just on that point, the framework that I'm kind of talking to is when you raise money either by selling tokens or by selling a SAF, which is a simple agreement for future token, you are clearly raising money as a security. The question is there a point at which that can be deemed a utility down the road? And is there a path to do that? And right now, Ethereum, as an example, is deemed a utility. If there isn't a path to do that, then effectively, Ethereum has a monopoly on being a utility token. And I don't think that is what is intended or serves the best interest of the world at large or the community for sure. And so that's sort of what I'm referring to is that element of it, not the actual security, Reg D, Reg S, Reg A, which is quite codified and clear.
Right. Oh, and I totally agree with you because we do want to see that path, right? We all do, because otherwise we are basically capping the potential of this technology.
Sure, I think you bring up some really interesting points. We have this existing framework, and I think I hear a lot of people saying it doesn't make sense to govern, this new asset class against something that's been around for a long time. Curious to hear what your thoughts on that are in terms of applying the regulations for traditional assets to crypto assets.
So my background is in financial engineering, and when I think about the idea of taking a very old law and governing current state, I'm thinking about just broader, beyond finance. And I see that in every aspect of what we do, right? We have laws that are governing our current state from, the Constitution itself. We are just looking at the Constitution and we're trying to adapt it to the current world. And so I don't feel that it is quite fair to take that framework from way back then and kind of adapting it. But we as a company is trying to trying to understand where the regulatory agencies are coming from, and we see it from their perspective. But we would really, really love to have more clarity. So there's a lot of lobbyists out there right now, and we follow their path, and we hope that they will be successful.
Well, I think we have 5 minutes left. I think I'd like to take this opportunity to let each of the panelists talk about any interesting projects that you guys are seeing in your pipeline, things that the industry could get excited about. Starting with you, Nick, with ICO Mission Control.
So we have a platform that we launched back in May called the ICO Mission Control. What it is essentially, it's a platform that we use to help startups launch their own token, cryptocurrency token. So maybe many of you have heard of the phenomenon of initial coin offerings. There were a lot of different startups that offered ICO tokens in the past year. And we had actually our own ICO called the cash token, QASH, back in November last year. We raised $105 million in a little more than 24 hours. Very grateful for this, the success and the confidence that our investors put in our token. When we finished the sale, and success wasn't really a guaranteed thing at the beginning, I must share with you. But we took a deep breath and we said, hey, there has to be a better way to go about this. Because any startup company that is thinking of doing their own ICO will certainly be doing it for the first time, and there will be a lot of uncertainty. So how do we leverage what we've learned in order to help other companies do their ICO? And that's what we've done with our product called the ICO Mission Control.
A quick introduction or to the specifics on the Hedera Hashgraph platform. It's very fast, and so while Ethereum does about 25 transactions a second, we do around 100,000, and we do that many, which is multiple orders of magnitude faster, because we use very little data. We think a cryptocurrency transaction takes about 100 bytes, and so what that means, it's very cheap, and so the cost of a transaction on our network is somewhere in the millions or hundreds of thousands of a penny. And maybe it'll end up costing 1,000th of a penny or 10,000th of a penny. What that means, though, is that we actually will enable micropayment. So for the first time, a machine, a person, a website, a pallet could pay 100th of a penny for something. That has never before been possible. With Visa, your minimum fee is 12 cents per transaction. With Square, it's a dollar minimum transaction size. So rather than give one application, I'm just thinking and sort of challenge you, and we challenge the world to think about what businesses and what new opportunities could exist in an environment where you can pay 100th of a penny for something, or half a penny, or 1,000th of a penny, because it's cost effective to do so. And you can do it quickly, and you can do it securely, and you can do it without having to set up an account with somebody, but it can happen kind of instantaneously. And so I think there is a huge opportunity for this micropayment universe going forward, enabled by distributed ledgers.
Awesome. So one of the biggest projects that we're working on right now is driving the innovation from top down, and that is having large companies drive the innovation based on market demand. They really understand the demand of the end users, and they have technology challenges that they wanted to solve. And our platform will provide them that solution by giving them the code base to build actual product. So we are an open source hardware that are working with really large companies. There's one in Vietnam that we can't really share the name of, but they are the conglomerate of Vietnam. So they obviously see the benefits of an open innovation model, and that's what they are going to work with us to drive the pace of innovation in Vietnam.
Can we give them a big round of applause?
Thank you so much.